20%, it is nothing but your EBIT, net operating income. In Summer Limited, we are not taking up any debenture value because it is only using equity as a source of finance. So under NI approach, to calculate the value of the firm, what is the formula? Market value of equity plus market value of debt. You will get value of firm. Hello everybody, I am your Divya Ma'am, Assistant Professor from Department of Commerce and Management, lecturing Vidhyaashram, First Grade College, MYSURU, the Temple of Excellence. My dear students, I welcome you all on your Unit 1, that is your Capital Structure Theory. So in the last class, we have discussed regarding the NI approach, what is NI approach and who propounded the NI approach, what was the theory and what was the assumptions was all about, and we have learned how to solve the problems on NI approach. In today's class, we'll be solving the problems on NI approach as well as NOI approach. So what is the NOI approach stands for? Net operating income approach and the problems on that. So let us not waste our time. So let's move forward and take up the problem on NI approach first. So problem number 3. So in the last class, we have solved 2 problems based on NI approach. The format is known to you people. The formula is known to you people. So now we can solve the third problem very easily. So let us read out the questions carefully. Spring Limited issues 12% debt of rupees 30 lakhs. So Spring Limited is using debenture in their capital structure, and Summer Limited issues only equity capital of rupees 30 lakhs. So we have 2 companies here, Spring Limited and Summer Limited. Spring Limited is all about 30 lakh debenture and your Summer Limited issues only equity share of rupees 30 lakhs. So earns 20% before interest and tax. So what is this 20%? It is nothing but your EBIT, net operating income. So on their assets of 60 lakhs. So on 60 lakh, 20% will be your EBIT amount. Assume tax rate 40%, so this tax rate we are ignoring, and capitalization rate is 15%. So what is capitalization rate? 15%. So what is this? Cost of capitalization rate. So cost of, it is also called as cost of equity and cost of capitalization rate. Equity capitalization rate for all the equity company, calculate the value for both the cases using NI approach. So using NI approach, we have to calculate what? We have to find out the value of the firm as well as your overall cost of capital. So under NI approach, to calculate the value of the firm, what is the formula? Market value of equity plus market value of debt. You will get value of firm. So in order to find out what is the market value of equity, in the question it is not given. So only EBIT is given, interest rate is given, as well as your debt amount is given, and capitalization, equity capitalization rate is given, but what is the market value of equity is not given. So let us solve the problem. So in the last class, the formula I have put in a format, so let's follow that format. Particulars, amount, so we'll be calculating for Summer Limited as well as your Spring Limited. So this is for Spring Limited, this is for your Summer Limited. So Summer Limited is using only what? Summer using only 30 lakh equity share. So there is no debt capital used in the question. So particulars, what is the format? EBIT minus interest. You will get EBT. So in that EBT, you have to divide your equity capitalization rate. Then what you get? you get is market value of equity. So let us solve. What is EBIT? So in the question they have asked earning before interest and tax, that is 16%, 60 lakh into 20%. So on your 60 lakh, 20% is the earnings before interest and tax. So let us use the calculator and check out what is your EBIT. So 60 lakh into 20%, it will be 12 lakh. So 12 lakh will be the EBIT for both Spring Limited as well as Summer Limited. So only interest calculation we are doing for Spring Company, because only Spring Company has used debt in their capital structure. That is how many percent? So 12% debt of 12 lakh. So 30 lakh into 12%. So how much it is? 30 lakh into 12%, it is 3,60,000. So this will be nil because they are using only equity capital, 12 lakh. So 12 lakh minus 3,60,000, it will be 8,40,000. So 8,40,000 is your EBT. So let's divide by your equity capitalization rate. What is equity capitalization rate? 15%. So 15 divided by 100, it will be 0.15. 0.15. 0.15. So 8,40,000 divided by 0.15, the answer you get is 56 lakh. So what is this 56 lakh? 56 lakh is your market value of equity. So 12 lakh divided by 0.15, you will get as 80 lakhs. So what is this 80 lakh? 80 lakh is your market value of equity. So for this, if you add market value of debt, market value of debt, that is your D, you will get what? Value of equity. So 56 lakh, what is the debt given? 30 lakh. 56 lakh. Debt is nil here because in that company only equity shares is being used. So 56 lakh plus 30 lakh, the answer you get is 86 lakh. 86 lakh, and 80 lakhs is your value of firm. $86 lakh and 80 lakhs is the value of the firm we have got. Now let's calculate the overall capitalization rate. So what's the formula? EBIT divided by value of firm into 100. This is for Spring Limited. So what is EBIT in the question? 12 lakh. What is the value of the firm, my dear students? Now we have calculated 86 lakhs. So 86 lakh into 100. If we do it, what will be the answer? Let's check it out seeing the calculator. So 12 lakh divided by 86 lakh into 100. If we do, the answer is 13.9%. So this is for Spring Limited. So Summer Limited, since we are using how much? So this will be 13.95%. So this is for your overall capitalization rate for your Spring Limited. Since two companies, we have identical companies. One is Spring Limited, Summer Limited. Spring Limited is using only debenture, and your summer limited is using only equity capital. So no debenture has to be taken for the consideration to solve the problem. So let us look into the summer limited overall capitalization rate. So the same formula, EBIT will be remain same, 12 lakh. And what will be the value, that is your value of the firm? It is 80 lakhs into 100. If we do it, what will be the value? 12 lakh divided by 80 lakhs into 100. The value will be 15%. How much will be the value? 15% will be the value. This is your overall capitalization rate. That is for your B, that is your summer limited company. So this is how we solve, my dear students. So in few of the cases, they'll give you both the companies, identical companies, which will be mixture of debt and equity shares. So in this company, Spring Limited is using debt and the Summer Limited is using equity. So this is how we calculate. In Summer Limited, we are not taking up any debenture value because it is only using equity as a source of finance. Moving forward, let us take up one more problem for more clarification on NI approach. So, a company earned net operating income. So, EBIT will be how much? 80,000. It has 2,08% debt. The equity capitalization rate is 10%. So, what is the debt rate? That is 8% interest on 2 lakh rupees. So, market value of debt is 2 lakh. What is the interest? Interest rate is 8% debt. So, that is your interest. Then the further information is given. Equity capitalization rate information is given. That is your 10%. Calculate the value of the firm and the overall capitalization rate according to NI approach and calculate the value of the firm if the debt is increased by 3 lakh and decreased by 1 lakh. So, increased value is 3 lakh and the decreased value is 1 lakh. So, you have to compute the three cases now. If the debt is increased by 3 lakh, if the debt is decreased by 1 lakh, and if the debt is how much? 2 lakh. What will be the difference? What is the value of the firm and what will be the overall capitalization rate? So, we have to calculate for three cases. So, according to our format, particulars, amount, case 1, that is your, let's consider it as case A, case B and case C. So, what is the format? According to our format, we have to calculate the value of the firm. So, in order to find the market value of equity, we have to calculate this EBIT. So, what will be EBIT given in the question? 80,000 is the EBIT given for all the three cases. EBIT will be 80,000. And what is the next step we have to follow? Deduct interest. So, what is interest? Interest is 2 lakh, first 8%. So, 2 lakh into 8% for the case 1. And for the case 2, it is 3 lakh into 8% for the case B. And what is your case C? So, it is decreased by 1 lakh. So, 1 lakh into 8%. So, this will be the interest rate for the cases. So, let us solve by using the calculator. So, 2 lakh into 8%, it will be 16,000. Next, 3 lakh into 8%, it will be 24,000. And my dear students, for the third case, that is your 1 lakh into 8%, it will be 8,000. This is for your case B. So, now let's calculate that. 80,000 minus 16,000, it will be 64,000. So, what is this? This is EBT, earnings before tax. Next, 80,000 minus 24,000, it will be 56,000. Next, 80,000 minus 8,000, it will be how much? It will be 72,000. So what is this? This is EBT. So after that, what step we have to follow? Divide by equity capitalization rate. So divide by, so this is EBT, divide by equity capitalization rate. So what is equity capitalization rate is given in the question? That is 10%. 10%, if you convert into decimal, 10 divided by 100, it will be 0.1. 0.1, 0.1 and 0.1. So 64,000 divided by 0.1, it is 64 lakh. So what is this 6 lakh? It will be 6,40,000. So what is this 6,40,000? It is nothing but your market value of equity. So 56,000 divided by 0.1, it will be 5,60,000. Next, 72,000 divided by 0.1, it will be 7,20,000. So how much it will be? 7,20,000 will be the answer. So what is this? This is market value of equity. That is your E. So what we have to compute? We have to calculate the value of the firm. To calculate the value of the firm, what is the formula? Market value of equity plus market value of debt. So we have got market value of equity. For this, let us add market value of debt. So what is market value of debt given in the question for all the three cases? So it is 2 lakh, 3 lakh and 1 lakh. It is how much? 2 lakh, 3 lakh and it is 1 lakh. Now let us add the value, market value of equity, 2 lakh plus 6,40,000. It will be how much? It will be 8,40,000. 8,40,000 is what? Your value of the firm. So 3 lakh plus 5,60,000 plus 3 lakh, the value will be how much? 8,60,000 is the value. So 8,60,000 is the value. 1 lakh plus 7,20,000, it is 8,20,000. So what is this, my dear students? It is nothing but your value of the firm. So it is value of firm. That is your B. So what do you have to calculate now? Overall capitalization rate for case A. So what is the formula? EBIT divided by value of the firm into 100. So what is EBIT? So EBIT is how much? 80,000. So 80,000 divided by value of firm, 8,40,000 into 100. So 80,000 divided by 8,40,000 into 100, it will be how much? 9.52%. It will be 9.52%. Now let us calculate for your case B. That is your overall capitalization rate. For case B, EBIT is 80,000 and your value of the firm is how much? 8,60,000 into 100. How much you get? 80,000 divided by 8,60,000 into 100, you will get 9.30%. Okay, next we'll solve the problem for case C. So same thing, EBIT will be 80,000. The value of the firm for case 3 is how much? 8,20,000 into 100. If you solve that, so 80,000 divided by 8,20,000 into 100, you'll get 9.75%. 9.75%. This is your overall capitalization rate. So this is how we compute the NI approach problems. Moving forward, let us look at your NOI approach. So in the last class itself, I have discussed, my dear students, what is NOI approach. So it is irrelevant approach. So what NOI approach says? So it is opposite to NI approach. So the value of the firm, the usage of the debt capital or the capital structure doesn't affect on the valuation of the firm. So there is no relationship between the cost of capital, value of the firm and the capital structure used. So that is what your NOI approach says. So it is an irrelevant approach. So we have the formula calculation of value of firm and equity capitalization rate. So in this problem, what they'll ask you, my dear students, they'll ask you to calculate the value of the firm, that is your value of the firm, and they'll ask you to calculate the market value of equity and equity capitalization rate. So let us look at the format or the formula. So I have put in a table form so that it will be very easy for you all to solve the problem. So what's the formula? To find out the value of firm, what is the formula? EBIT, that is your NOI approach. EBIT value, if you divide with the overall capitalization rate that is given in the question, you will get what? Value of firm. So that with that, if you deduct the market value of debt, you will get the market value of equity. So this is the formula. If they ask you to calculate the market value of equity, what is the formula? Value of the firm minus value of debt, you will get the market value of equity. So next, how to calculate equity capitalization rate? So that is, equity capitalization rate is equal to EBIT minus interest divided by E, that is your market value of equity into 100. So this is how you calculate. So we have a verification formula. So what is that verification formula? I'll be writing it. Kindly note down the verification formula. So KO, that is your overall cost of capital, is equal to value of your debt. Debt percentage will be given in the question. That is your cost of debt, market value of debt divided by value of the firm plus cost of equity, market value of equity divided by value of firm. So this is the verification formula. So whatever problems you solve, with the value you can verify whether the problem you have solved is correct or wrong. Moving forward, let us take a problem and understand what is NOI approach. A company is having EBIT 1 lakh. So what is the EBIT given in the question? 1 lakh is the EBIT given in the question. Debt borrowed at 10% rupees 5 lakh. So 5 lakh will be the market value of debt. So what will be the interest rate? 10% is the interest rate. Overall capitalization rate is given 12.5%. What would be the value of the firm and the equity capitalization rate? So you need to calculate the value of the firm and the equity capitalization rate. So one more adjustment we have in the same question. So let us look into what is that adjustment is all about. Assume that the previous problem, the company increases the debt. So with the same problem, we are having one more adjustment. What is the adjustment? The company increases the debt from 5 lakh to 7 lakh. So from 5 lakh to, they have increased the debt 7 lakh. So you need to calculate what is the effect on the value of the firm, and uses the proceeds to repurchase equity share. What is the effect? So let us compute this by using NOI approach. So as I have told you, let's use the format for our clear understanding. Particulars, amount. What is EBIT given in the question? EBIT. So we have case 1, under that the debt will be how much? 5 lakh. We have case 2, under that the debt is increased by how many lakhs? 7 lakhs. So we have case 1 and case 2 to be solved. So case 1, that is your case A, case B. Let us assume it as A and B. So what is EBIT? So 1 lakh is the EBIT. Next, what is the next is given? You have to divide by overall capitalization rate. So what is overall capitalization rate? KO. It is 12.5%. So 12.5% you have to convert into decimal. So 12.5%, it will be 0.125. It will be how much? 0.125. So 1 lakh divided by 0.125, it will be how much? 8 lakh. So according to our format, what is the next step that we have to follow? It is whatever we got is value of the firm. So what is this? Value of the firm. So next what we have to do? We have to less the market value of debt. So if we deduct the market value of debt, we will get market value of equity. So let's deduct the debt. So less market value of debt, that is your, this is V, this is E, that is D, this is D. So market value of debt, so what is debt for first case? It is 5 lakh. And for the second case, what is the debenture, my dear students? It has been increased 7 lakh. So whatever value we are getting, from 8 lakh to 5 lakh, it will be how much? 3 lakh. So this is 1 lakh. So what is this? This is nothing but your E, market value of equity. So with this value, let us calculate the equity capitalization rate. Moving forward, equity capitalization rate is equal to EBIT minus interest divided by value of the divided by market value of equity into 100. So what is the formula? EBIT minus interest divided by market value of equity into 100. So that is the formula. So what is EBIT? 1 lakh. So we are solving this for case A. 1 lakh minus interest. So what is your debt? Debt is 5 lakh. So 5 lakh into what is the interest rate? 10% is the interest rate. So 5 lakh into 10%, it is 50,000. It is 50,000 divided by, so what is the equity we have got? 3 lakh. So 1 lakh minus 50,000, it is 1 lakh minus 50,000, it is 50,000. 50,000 divided by 3 lakh into 100, you will get the value as 16.67%. So this is correct. So let's solve the cost of capitalization rate, cost of equity capitalization rate for your case B. So this is for your case B, this is for case A, and this is for your case B. EBIT minus interest divided by market value of equity into 100. So what is EBIT? 1 lakh is the EBIT. So what will be the value of your market equity? It is 1 lakh minus interest into 100. So what is your 7 lakh is the market value of debt. On that, what is the percentage we have to take? 10%. It will be how much? 70,000. So 1 lakh minus 70,000, it will be 30,000. 30,000 divided by 1 lakh into 100. So 30,000 divided by 1 lakh into 100, it will be around 30%. So this is your answer. So the verification formula, same, the verification formula will be similar. So overall cost of capital is equal to cost of debt, value, market value of debt, value of the firm plus cost of equity, market value of equity divided by V. So this is the verification formula. My dear students, it's an homework for you. So you have to calculate the verification formula. So how to calculate, I will explain. Solve the problem, verify whether the problem is right or wrong, and put in the comment section. So what is the overall cost of capital rate is given? That is your 12.5%. So 12.5% is the value. So if you solve this equation, you should get 12.5 itself. 12.5 itself. So how do you get it? So cost of debt. What is the cost of debt value given? 10%. So 10% if you convert into your decimal, how much it will be? 0.10 will be the answer. That is your decimal. 10%, 10 divided by 100, it will be 0.1. So your debt value will be how much? Debt value will be 0.10. What is the market value of debt? 5 lakh is the market value of debt, right? 5 lakh as it is. And what is the value that you have calculated for A, for case A? That is your 8 lakh. So 5 lakh divided by 8 lakh. Next, plus cost of equity capitalization, the rate that we have calculated, how much it is? 16.67%. Convert that into decimal. 60.67 divided by 100, you get certain decimal. So write the decimal here. And what is the market equity value we have got? Just now we have calculated, that is 3 lakh. So 3 lakh divided by value of the firm will be 8 lakh. So divide these two, multiply with the cost of debt, divide these two, multiply with the cost of equity, and add the value. The value should be equal to your overall capitalization rate, that is 12.5%. This I have taught you for case A. So similarly you have to do it for case B. So then the problem what you have done is correct. So like this only, in your examination they might ask you, they might give you two identical companies. Say X and Y company, one company is using debt capital, the other company is using equity capital. So they might give you the overall capitalization rate and as well as EBT tax rate, and then they might ask you to calculate the value of the firm using NI approach and NOI approach. Similarly, what we have solved the problem, so they might merge the problem and they might ask you two identical companies might be given. EBIT will be given. So EBIT will be similar, tax rate will be given, overall capitalization rate will be given. So everything will be similar, only the debt and equities what we have solved in the Spring Limited and the Summer Limited. So that kind of question they might ask you and calculate the value of the firm by using NI approach and NOI approach. So the format and the formulas, everything will be similar. So in one problem only you need to show the calculation of NI approach as well as NOI approach. So that's it for today's class. Kindly take up the screenshot. I'll just move out of the screen. Problem 3, problem 4, NOI approach, the formulas, verification formula and the equity capitalization rate formula. Problem 5. Thank you so much, my dear students, for joining for today's class. Hope the session was interesting. So this problems that we have solved is for 10 marks. So keep learning. So stay fit, stay healthy. Smile is the biggest jewel you can wear. Keep smiling, people. Thank you.